Okay, Beth, talk to me. That was your song. Talk to me.
It was my song. I think it was a few people's
Yeah,
songs,
several
as I
y'all chose
recall
it.
reading. To me, it just shows that if those two can both rise up every day and make it a good day, everybody can. You got to pull it out a little bit. I don't know, and her voice is so incredible. It shakes your soul.
Yeah, very moving. Anyone else got any comments on that at all?
I picked that song too. One of the reasons I picked this because it's a really good perseverance song that no matter what you're going through, whether it's like pain, heart, you continue to rise up, you continue to move forward and go on. And looking at the video is even more astounding because, you see someone who's paralyzed and, cannot walk, and he's still asking his significant other, whether wife or whatever, go on a date and continuing to try to move on.
And, she, not only does he have great obstacles in front of his life, she does as well. And, it was so good in the video to see those moments where, she's struggling, but, she smiles. And you could tell she's struggling at times, but every now and then, she's got a great smile on her face. So she's overcoming the obstacles. I think she's the one that we're more focused on during the video. The things that she had to overcome. God knows the things he had to overcome. He apparently was in the military serving his country when something tragic happened. And you never know when tragedy is going to come. My tragedy, as I've shared with you before, came on June the 23rd in 2009 as I was going to Birmingham like any other day, when I had a blowout on my car at 70 miles an hour in the fast lane and went over 3 lanes of traffic, and I was thrown from the car. And you don't know that your life can change in a minute. Now, to make that story more interesting, let me tell you what happened the day before. So the day before, I was driving my Nissan Altima, I believe it was at the time, home, and the radiator leaked. So by the time I was coming home in the evening, there was no shop to take it to. And on June the 22nd, I had to stop at every exit from Birmingham, Alabama to Bowden, Georgia, every exit to let my car cool off, to stop at a convenience store to get another gallon of water to put it in my radiator so I could just get home. And it took me past midnight getting home. And I remember posting on Facebook that June 22nd was the worst day of my life. Nothing had gone right. And that I was having to stop every day, or every exit on the way home. Got home midnight or so. It's horrible. So that's why I had my car in the shop the next day, and I borrowed Beth's vehicle. And that's the one I had a blowout on, and tossed me out, and you're in the hospital for 51 days and in a wheelchair for 6 months. And that changes you when you face something, when you've never faced that before, because then when you go to a restaurant and you're in a wheelchair, now it was kind of interesting, and I don't want to get into, normally the server, the waiter or waitress would bring me the check when Beth and I would go out. And it was an interesting dynamic when you go and you're in a wheelchair, guess who they brought the check to? Brought the check to Beth. So it's an interesting dynamic. When they would ask how many in your party, normally if Beth and I go in, they'll probably ask me. I'm kind of the leader, and how many in your party. But when you're in a wheelchair, they don't ask you, they ask the other person. Interesting dynamic, and you never know till you experience that. But I think about all the sacrifices that my family had to make during that time. It's just an interesting thing. You're not humbled until your wife has to wipe your butt after you go to the bathroom, and which Beth had to do. I had to wear a diaper. I never forget the day they put me in a diaper in the hospital, how humbling that was. So I don't know, you see a song like that, Rise Up, and you realize that the obstacles that people have in their lives that they overcome each and every day. And undoubtedly, all of you have had obstacles in your life, and you've got more obstacles to come. It's not always an easy ride. We try to prepare for the unexpected, but there's simply some things that we can't prepare for. And we're well equipped to deal with so much more than we ever could possibly believe. So that's our musical interlude for the day. I thought it was very, very good. So for those of you that shared that, thank you. I've heard the song, never had the video. So that's why I love hearing your theme songs. I like hearing what it is that motivates you, what it is that inspires you, what it is that drives you. As I've told you, what I do is I'm engaged in the study and mastery of financial markets and the enlightenment and of the minds and challenging of the hearts of college students. And that's what I do. So it's interesting from my perspective to learn kind of what motivates you, what gets you going. I wanted to start with this, and I'm one of those that if I see something, I instantly take it. Oh, whoever said that, or a quote or whatever. So I've not researched that this dude actually said this or not. And I know your discussion assignment for this week is Warren Buffett. So don't think I'm just a Warren Buffett disciple and I believe everything that he says. And I don't even know if he said this quote, but I love this quote regardless if he said it or someone else said it. Listen to this. So it's attributed to Warren Buffett. Well, who knows if he said it or not? I haven't researched it, but I love this quote. If you don't find a way to make money while you sleep, you will work until you die. Oh, I love that. So if you don't find a way to make your money work while you sleep, you will work until you die. So when we're talking about wealth accumulation, we're talking about wealth building. It's great to have assets that work for you 24 hours a day. Whether you be a farmer who has crops that are in the ground and growing while you're sleeping, or you've got cattle that are reproducing and you're raising cattle, whatever it is that you're doing, it's interesting that you've got to make that work 24 hours a day, basically. And that's what our investment funds are to do. So what I do with my other class is we always start out by just kind of looking at the markets and looking at where they are. The S&P 500 futures, the E-minis, you'll hear me call this the E-minis. It's /ES. This is a futures. Always look at the futures. Up 0.9% today. NASDAQ up 1.13. I look at the advancers over declines. It's called the AD line, and this is this. So the advancing stocks are it's a positive 282, which is kind of bullish for the day. NASDAQ again up 1.09%. And the more I go through this, the more you'll understand it. But I'll kind of look at it from a short-term basis, and then I'll look and see for the rest of the day, what do I think? Well, this is something called VWAP. You may have heard of. Some people say VWAP. It's value-weighted average price. The little gray area here is the opening 15-minute range of the market. Then we have what was the overnight highs in the market. So we've breached the overnight highs. And I've got some pivot points here, the hourly mid-band. Here's where we opened today. We call this the cash open. Cash opened at 45.43. Currently it's 45.62. So I always look and see, are there areas of support down below us that could catch us? And there's more below us than there are above us. I don't see any lines that I've drawn there, but do you need to understand all of this now? No, you really don't. This is nerd stuff. This is, me looking every day at what the markets are doing, and the market is strong today. I want to talk to you about a couple of things and what you'll figure out about my overall philosophy. Now, unfortunately or fortunately, you are brought into my biases, right? That, let's see, Jack says, that's interesting that he would say that, as he is well past retirement age and still working. But is he working? Jack, is he working? I like what your second comment says. Perhaps it melds with, if you're doing what you love, then you'll never work a day in your life. Absolutely. So I retired in May of, what year was it? Well, last year, 2021. Yeah, I retired in May 2021. So I'm here at the University of Alabama now, teaching a class here or there. Do I have to teach it? No, but I love being with y'all. I love teaching people how to invest, how to trade. So am I really working? No, because I do it anyway. I teach a daily class every day about trading and finance. Do I have to do that? No, but I don't ever miss a session. It's like, Beth, we got to get back home. My class starts at such and such. And I'm so excited to be there. So excited to be here with you. It's not that I go, oh God, I got to wake up tomorrow and I got to do. No, it's just a joy to come and do that. So yeah, I think Warren Buffett's he's not working at all. He's enjoying what he's doing. If you've never read the book, The Snowball, it is the largest book I've ever read. And it is a biography of Warren Buffett. You really should read it. It's pretty interesting. My Uncle Pete gave me the book, God rest his soul. And he's a fascinating guy, and just to kind of see how the fellow came up. It's called The Snowball. Pretty sure that's the name of the book. So let's talk about what I wanted to talk about yesterday, y'all. And I don't like to get political on news and stuff like that, but I happened to watch some of President Biden's speech yesterday, and I was in shock, y'all. I was in shock. So I'm neither Republican or Democrat. I'm probably more libertarian. Although I'm one of those that never vote libertarian, because you go in the back of my mind, that those people probably never have a chance to be in office. But I'm kind of like, government, stay away from me. Let me do my thing. Let me live in peace and harmony. I'll do my best to make my community a better community. That's how I like to live. I want to do what's right in my community. But as I watched that speech yesterday, I was in shock, because the first thing that it looked to me like the U.S. is accepting is that Russia is going to go into the Ukraine. And I think that's inevitable. I think Russia going into Ukraine. And I think what President Biden said yesterday was this: we understand, Vladimir, that you're going to go in there, just don't go in too big. Kind of tone it down a little bit. We don't want you to kill too many people. We don't want you to maim too many people. We just want you to not go in too big. Don't make a big splash, because everybody and the mama don't want to get involved in this little conflict that's going on. All right. So if he basically gave a green light for Russia to invade Ukraine, which I believe will happen before Valentine's Day, we'll see. I'm a terrible predictor of future events. Then I would also expect that China will look at this with the eyes of, oh, okay, so it's okay to do that. Okay, so we got a beef with Taiwan. So we'll go into Taiwan maybe right after Russia goes into Ukraine. Okay, so now what's this all mean? Well, we have a large amount of products that come from these two countries into the United States. We know that Russia, Ukraine, this could possibly mess up some energy going to other parts of the world. So we would anticipate energy to skyrocket. We would anticipate more supply chain issues. We would expect that this would have a negative effect on the markets. So we would anticipate that the markets in the United States and worldwide would probably at least experience some type of correction. So then we would go back and say, where have we seen this before? Because history often repeats itself. So we would go back and look at what happened during the September 11th attacks. We would look at what happened during the Vietnam War. We would look at what happened when the last time Russia invaded somebody. We'd look maybe back at World War I and World War II. And so we try to figure out what could possibly this mean to us as investors. And here's what I'm going to tell you that is going to shock you. You ready? hold on. News is noise. It really doesn't matter for your and my investments what happens with the news. Matter of fact, I'll tell you that I am a much happier individual today because I'm not in my commute. I'm not listening to the news on the radio. I'm not watching the news. I don't watch Fox News. I don't watch CNN. I don't watch, MSNBC. I don't really watch that. So when I tell you that I am engaged in the study and mastery of financial markets, you're probably thinking that I've got on CNBC all day and I'm watching Squawk Box and I'm watching all what the interest rates does and what the Fed does and all that stuff. And I'm going to tell you, quite frankly, no, I don't, because my philosophy is news is noise. It is there to confuse you. It is there to divide you. It is there to get you off course. It is there to scare you. It is there to derail you from your investment objectives. And if you were alive and investing on September 11th, 2001, when we were attacked here in our country by terrorists, then you would have probably said, I need to get out of the market and stay out until all of this is over. And you would have been wrong. You would also have been wrong if in March of 2020, when the market cratered 35%, keep in mind the 1987 crash, which I was a teenager. I don't look that old, I know. Yeah, I think was a 27% down move on that crash. But the COVID crash was 35% down approximately in the S&P 500 and the overall markets. Can you imagine how many people at that moment contacted their 401k or logged into their brokerage account that had not logged in forever and did what? They said, I'm moving to safety. I'm moving to some period of safety. And that would have been the wrong thing to do. Because if we look at the SPY and we look at, let's see, 6 months, year, 5 years, okay? Let's go to 5 years. Then a 5-year chart, let's go to March of 2020. Here we are. We are at the COVID crash. And what was here went to here, and everybody panicked and sold. Now, Warren Buffett says, when everyone is greedy, be scared. When everyone is scared, be greedy. You, on that day, when the market dropped 35% here, should have done what? You should have said, if I have any cash sitting on the sideline, if I have any amount of assets that I could put into the market, you should have gone into the market on a 35% down move, because look what has happened since then. See the linear, this is linear regression channel. See the blue and the crimson kind of color there. This is a linear regression channel of the upward movement since that time. Now, what if the market had continued to do this? Well, you would have continued to dollar cost average, or through some participation of continually putting assets into the market, would have done so until such time as the market would recover and come back. Now, I know what you're saying, but Bobby, what if the market never comes back? Okay, then chances are you and I have more concerns than the market. If the market never comes back, I'm sure in the 1929 crash, people, when they were jumping out of buildings and killing themselves because their wealth was pretty much wiped out. I'm sure they said the market will never come back. I'm sure during World War II, they said the market will never come back. I'm sure during all of the drama of the 70s, people said the market would never come back. And then after the bull run of the 80s, they said, oh gosh, this will never do it again. And then it did it again in the 90s. Then we had the 2000.com crash or correction. And people said, oh, the market will probably never come back after that. And then in 2008, we had the housing crisis. And the market tanked then, and people panicked and sold and got out of the market and said that the market would never come back. And then March 2020 came and the market crashes and everybody gets out of the market and says the market will never come back. History repeats itself. And during your lifetimes and my lifetime, I believe strongly the markets are going to be just fine as long as we have liquid markets. There's participants, there's liquidity, there are no available alternatives. Where are you going to put your money? People say, hey, I'll stick it in a mattress today. Okay, well, with inflation at 7%, your $100 today is going to be worth $93 tomorrow or a year from now, because it's going to be eroded by the inflationary pressures that are going up. So what are you going to do with your money? Okay, so the Fed announces that we're going to raise rates 3 or 4 times this year. Some of the experts say that it may be as many as 5 times this year. Okay, so they're going to raise interest rates. They're virtually zero now. So if they raise rates to 1, 2, or 3%, is that going to force you to go, oh, hell yeah, I'm going to put my money in a 3% savings account? Yay! When there's 7% inflation, so now your $100 is worth you make 4%. I forget my numbers I just threw out. So now it's worth $96. Okay, guess what people are going to continue to do? They're going to continue to place money. The big boys are going to continue to put money into the financial markets. It's just going to happen. It's going to happen. Right? So the first thing that you need to know when you're participating in the markets, the first thing you look for when you're investing in something is this. The most important thing, gosh, y'all need to star this. Oh, is it a big old star? Liquidity. All right. Let's say Afghanistan has a stock market and you go, man, I am bullish on Afghanistan, so I'm going to invest in Afghanistani stocks. Can someone tell me why on God's green earth, Joseph, I like your little headphones you got on there, Joseph. That looks good. You got a gaming chair and I've got an old man's chair, but I like your chair. So you look like a cool dude, man. Joseph, why would I not invest in the Afghanistan stock market provided they have one?
Well, personally, I wouldn't, because of the uncertainty with that market, given its history being, sort of a war-torn country through pretty much its inception. So personally, that's what I would say.
All right, Joseph, thank you so much. The number one reason I wouldn't do it, and I agree with Joseph to a large extent, right? A lot of uncertainty over there, is there's no liquidity. Nobody and their mama is putting money in the Afghanistani stock market. Where are they putting their money, y'all? In American markets. That's where the action is. That's where the action is. That's where the liquidity is. Now, let me show you how you can tell if there's liquidity. Y'all ready? Let's go to our trading platform. Y'all are gonna like this. How do I know that there's liquidity in SPY? So let's put in SPY. Here's how you know when you put it in. There have been 46 million shares traded just today in SPY. How do I know it's a liquid market? Because I can look at not only the volume, but I can look at the bid-ask spread. Do you see the spread here? We said the ask is higher. You buy on the ask, you sell on the bid. Buy on the ask, sell on the bid. But I want you to look, what's the width between the bid and the ask? What is the bid ask spread? How many cents?
1 penny.
It's a penny wide. It is a penny wide. And what does that mean? That means that there is liquidity. Let's look at Apple. Is Apple a liquid product that you could invest in? Let's see if it provides liquidity. There are 47 million shares that have traded hand. What is the what is the bid ask? 1 to 2 cents. Everyone see that? That is a sign of liquidity. Let's go to something else. Let's look at someone give me something that's not as popular.
Seadrill,
What is it?
Seadrill.
What's the symbol?
I believe is SDL or SDR. It was
SD
OML.
Seadrill Partners.
Yeah.
That it? Okay, let's see what that is. Okay, exactly. Look at the bid and the ask. 0.12 to 0.21. Would I ever put money into SDLPF? Oh, heck no. The volume is 0. The bid and ask is not a penny or 2 wide. I would never put money in this. Let's look at the NASDAQ. The NASDAQ is QQQ. That's the ETF for the NASDAQ 100. It is 370, 69.71, a penny to 2 pennies wide, volume 42 million. So what I want to do is I would never do anything that had humongous differences between the bid ask. I'm looking for 1, 2, maybe a maximum of 5 cent differential between the bid and the ask. And I'm looking for, hey, couple million shares. I want a lot of people to be trading whatever market that I'm in. This is why you don't go to the Afghanistani stock market, because you don't have anything that would be trading 42 million shares a day. Let's look at Tesla. Tesla's volume is 14 million. It has a bid ask of 44, what is it? I can't even do it, 40 something cents, right? Well, for the size of the stock and the amount that it's going for 1,029, that's not bad, right? But still, it's not enough liquidity. And I would never put something in that's probably going to cost me $1,029 a share. And the volume is okay, but it's 14 million. So you could buy Tesla, but you got a bigger 30 to 40 cent widespread. You want to make sure, so it has ample liquidity. It's just not quite the liquidity of something like SPY or the Qs or Apple. Everyone see the difference? Why is liquidity important? Someone tell me why. The most important thing, you invest your money. Let's say you invested all your money into that symbol that we put up there that she offered and whatever that was spiel. We're in that. Why do you not put your money in?
Is it because you want to be able to sell it when you need to?
Oh my gosh. Bing, bing, bing. Brad, send me an email and tell me, give me my 1 point. That is awesome. So Brad's going to get an extra point because, yeah, you don't know pain until you can't get out of the market. You don't know pain until your stock is down 50% and you're trying to unload it because you're scared to death and you can't get out. There is no fire exit. There is no possible way for you to get out, and you'll have no alternative but to sit there and take whatever the market gives you. Painful. How do I know? Been there, done that. Been there in things that I shouldn't be in because it doesn't have liquidity for me to get out. The most important thing for you to consider is liquidity. So you're going to be a financial planner and you're going to be putting people into different assets. You better make sure it's got liquidity. How do you check liquidity? You want to look at the volume. I would never trade anything that's not doing under 1 million shares a day. And even 1 million is not enough for most of the things that I want to be in. I want several million shares traded a day. I want a bid-ask spread that is pennies wide, not dollars wide, because I just can't get out. Let's look at the one that's been falling like a rock lately, and that is Zoom, not Zoom, but what's the Hood? Hood, right? That's Robinhood. So Robinhood's been falling like a rock, but still, look, it's still got liquidity, right? It's a penny wide, and it's 13 million shares. So a lot of people are trading it. So let's look at Zoom. Zoom, as we said, is a member of the NASDAQ 100, Zoom Technologies. Where's my stuff? Oh, it has no option, so it's not going to give us total information on that. Let's see, what else can we say? Zoom has no options. That's interesting. What else is there? Someone give me something.
Is that the right ticker for Zoom?
It may not be. What is the ticker? What's the ticker for Zoom?
I don't know, but I put it in on
ZM.
my, Yeah.
ZM.
ZM. There we go. Zoom video. There we go. So 159.75, 159.93, right? So it's not quite as liquid, much less liquid than Tesla, any of these others, right? So, you know, it's got 12-cent wide markets. So there's still not as many people in this. So this is definitely not something that I would invest in. Now, I'm going to give you another rule that I go through. So does anyone have a question on liquidity? If you're going to put your client into something, or you're going to put your family's money or your money into something, you dang well make sure it's liquid. You want to get out. How many of you been stuck in real estate and couldn't sell it? Now, right now, the real estate market's hot, probably where you are. And if you put a for sale sign in it today, you'll have 4 offers and it'll be sold by next week. But you didn't hold rental property like I did in 2008. Where I had a sign in my yard for 365 days without an offer. And I was scared to rent it because I was like, I don't know about the rental market either. I just wanted to get out of it. And I couldn't get out of it. And that's when people start burning houses down and claiming insurance. That's when you start seeing those type things, right? Because they can't pay for the house. I remember we went to church that night. And listen, I talk about church and faith a lot. Don't nobody get offended, please. Or I should say, don't anybody don't get offended. I'm not trying to push anything on you. I'm just going to tell you what happened to me. Okay. So nobody go, oh, Bobby talked about Jesus. Okay. Sorry. So I went to church one night. I remember the pastor said this. He said, you got a mountain in your life. And he was giving the scripture, right? It was an Old Testament scripture. And I remember what it was. But he said, grace, God's grace is sufficient for that mountain that's in your life. I'll never forget. And I had this rental property back in 2008, 2009. I couldn't get it. So I told family, I said, you know what we're going to do? We're going to drive by 203 Campbell Avenue in Bowden, Georgia. And we're going to run by that place and we're going to roll the window down. We're going to yell, we're going to yell grace 3 times and we're going to run off. We yelled grace 3 times. I said, God, I'm turning this over to you. And guess what? In 2 weeks, I had an offer and a closing on that property. Maybe a coincidence, I don't know, but it was just kind of cool, right? Because I stopped worrying about it, and I said, "Hey, it's out of my hands. I can do all I can do." And when I released that inhibition and that fear, then I was able to let that property go. You got to be the same way in your investments. When you're looking at this stuff about Ukraine and the media and the president and who's in the House and who's in the Senate, you're getting focused on the wrong thing. You're focused on noise. You're focused on noise. As long as we are in America that has companies like Amazon and Apple and Tesla and Zoom and all of these companies, y'all, trust me, corporations are going to be fine. Corporations are going to be fine. And me putting my money into something that tracks the corporations, regardless of Ukraine, regardless of China, regardless of Afghanistan, regardless of the news, all it is noise. And it is meant to distract you and to get you sidetracked from you making wealth. Because when price goes down, Kyle, what do you and I do?
Oh, well, we buy when it's cheap.
Kyle, what's your favorite store to shop from? I mean, it's your place, man. If you want to go somewhere, what's your place that you're going to go to?
I'm pretty lazy. I stick with Amazon.
Amazon, baby. So you get on there and you see that something that was $400 was $200. And something that you wanted at $400, but you're like, man, that's a little too much. And it goes on sale for $200. What do you do, Kyle?
Yeah, I'll pull the trigger, did it. If it's half off.
Exactly. Hey, Dana. I don't think we've ever talked to Dana. Dana, you there? Can you talk, or you maybe the work situation or what? Dana Finnan? Dana. Hey, Dana. I don't hear you, Dana. Oh, let me tell you how to quickly take off the mute button. It's just by hitting the space bar. hit the space bar, hold it down while you're talking, then let it off when you stop and you'll stop. How about Alyssa? Hey, Alyssa,
Hey, sir.
what's your favorite place to shop, Alyssa? Surely you like shopping.
I like Target.
Target. My wife likes Target. I hate going in there. I hate that place. It is red all over the place. Oh my God, I never seen so much red. And she made me go in there before Christmas to get some ungodly whatever, right? But now they've got the Target pickup and all that kind of stuff. And she sent me in there with her. I can't even remember what I got, but I hate that place. So what's your favorite thing to buy in Target? What do you like getting in Target?
Well, they got a little bit of everything. So you go in for some milk, but then you come out with a new shirt and maybe a decoration.
Yeah.
So,
And so if the shirt that you go in and you wanted last week, you're like, yeah, I'm my way off that. And all of a sudden they slash it by 60%. What do you do, Alyssa?
you know what? Actually, you're trying to make a good point, but I'm gonna sleep on it.
You're going to sleep on it. Okay, I got
Yep.
you. But you see what I'm saying, right?
Yeah.
Dana,
I
look,
do.
Dana is the captioner. Oh, Dana, this is awesome. So I will try not to say shit, okay, while we're in the thing, so you won't have to type that out. All right. Okay, so Dana is the captioner. I love that, Dana. That's cool. All right, Dana. So you didn't write that bad word that I said down. I hope not. Okay. Yeah, Crimson. I don't know. It's just red, y'all. I live in Georgia with all these Georgia Bulldog fans. Oh, and they're driving me nuts now. Oh, they're driving me nuts. Oh, so okay, so Dana's the captioner. You still talk, Dana. You still part of the class. All right, so let's see. Dr. Brent, where do you like to shop, Dr. Brent?
Well, I like to go and look around in Cabela's a lot.
Cabela's, yeah. And so what would be your thing to buy at Cabela's? If
I like
you
to-
saw something on sale for 60%, what would you buy?
Those camping meals, I would load up.
Yeah, the camping meal. I like that, right? Hey, in case something goes bad, you doomsday prepper maybe. So you load up on stuff. Y'all, that is the American way. That's what we do in everything except the market. Market's down 35%, and what do? We panic. We run to the exit at the exact time that we should be doing the opposite. So what I want you guys to do is to think that news is noise. It is there to distract you. It is there to divide you. It is there to conquer you. You and I are too smart to be distracted by noise. You and I are too good, too intelligent to be distracted from our overall goal. So all of a sudden you're managing money for somebody and the market drops. You've got them all in the S&P 500 and the market drops 30% in March 2020. They're ready to withdraw money from you. What do you tell them? Bye. You need to be coming in more. But I want my money back. Okay, but here, I want you to mark this conversation that you and I are having today. In 10 years from now, you will look back at this as one of the largest mistakes that you've ever made in your life. That's what you do. You got to figure out what the crowd is doing and go against the crowd. When the crowd is bleeding in the streets and they're sell, you go out and you buy. When the crowd is out there buying, that's when you need to take a few of your shares and sell. When everybody is greedy, you be scared. When everybody is scared, you be greedy.
And
Okay,
that's really what AIM is all about, right, Dr. Bob?
that is exactly what AIM is all about. What is AIM? Okay, so I have given you a reading assignment, and I don't put too much on your reading assignments, and I'll tell you why. You are supposed to read chapters 1 through 4 of How to Make $1 Million in the Stock Market Automatically. Guess who's also reading that with you? Even though I've already read it probably 20 times, I'm back there with you because I'm not going to give you something to do that I'm not doing myself. So you sitting there and you got 18 kids like I've got. You've got a wife who won't drink Dr. Thunder and has to have Dr. Pepper because she's a little bit on the snooty side, right? She's uppity. So you got all this stuff going on, and I got ball games, and she's got to practice to go one time, and then I've got to get my taxes ready, and my garbage pickup guy wants me to pay him on the 15th, and I got to sign a little thing saying that I'll get my money to him on the 15th, even though I send it to him on the 8th of every month. He wants all this. All these people's got all these demands on you and me and our time. So I'm not going to put too much on you that's going to burden you down. The first class you've ever had where you've got a professor who knows what it's like to have kids and family and obligations and spouses and all this kind of crap that's in your life. I got it. So I'm not going to put too much on you. So I'm going to ask that you just take everything with you don't have to agree with me. You don't have to say, oh, Dr. Bob, I'm all in. I want you to say, you're an idiot. You don't make sense on this. That's fine. It's absolutely fine. Now, I'm going to give you the next thing that I never want you to do. And I violate this all the time, but I've not violated it in the last 20 days. Y'all ready? You're going to think this. This is advice. This isn't something that I'm saying you've got to do. There is never a reason, ever, never, 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 ever, never, ever, never, ever should you trade a stock. Should you buy or sell stock? And let me go a little bit in it because you're like, what? Never, 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 ever, 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 ever should you buy or sell a stock in an individual company. I threw my pen down. I threw my microphone down. Ever, never, ever, 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 ever should you buy or sell or trade a stock in an individual company. Does that mean Apple? Yeah, it means Apple. Does that mean Tesla? Yeah, it means Tesla. Does that mean Zoom? Yeah, it means Zoom. I have simplified your trading and your investments for the rest of your life because you never, ever, 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 ever have to trade another stock again. Now, let me go to Zach. Zach. Sitting there with your little blurred background, just like my blurred background, and your good looking glasses, like I got my good looking glasses, and your little sweater thing that you got on. Are you sitting in your underwear too, like me, or is it just me?
No. Got my yoga pants on. I'm good.
Got you. All right. So, Zach, why am I telling you not to invest into stock in an individual company? Tell me why. Now, again, this is my bias. This is not going to be able to CFP exam, by the way.
Yeah, well, I mean, I think you realize and appreciate that we collectively probably don't have the time or the acumen to really thoroughly analyze an individual stock and give it the attention it needs. So it's easier just to buy the ETFs.
Zach, I like you, dude, but you are no Warren Buffett.
Right.
Lisa,
That's right.
Lisa Urena, I see you kind of smiled at that. Lisa, you are no Warren Buffett.
No, I'm not.
Bobby Gaines is not a Warren Buffett. Dr. Brent is not a Warren Buffett. And guess what? I don't want to be a Warren Buffett because a Warren Buffett, all he does is spend his time in the Wall Street Journal. Ain't nobody got time for that. All he's doing is reading Barron's and he's reading Fortune. Who got time for that? And not only that, he's reading 10 Ks and 10 Qs and he's reading annual reports, and he's having to attend conference calls on all these individuals. And stop it. There's no need for you to open up a balance sheet. There's no need for you to open up an income statement. There's no reason for you to open up a statement of cash flows on all these companies so that you can pick out a stock that's a winner and that's going to beat the S&P 500, because if you do it, 99% of you, even after expending all of this time, doing all of this research and trying to find the next needle in the haystack, you would be better buying what? The haystack. Y'all, what I'm telling you now is controversial. I do not stray from controversy. Some of you may disagree with me. I don't give a rat's ass if you disagree with me. Some of you may think I'm an idiot. I don't care. I'm simply giving you my opinion and my bias. When I have made the biggest mistakes, it was when I was buying and trading stocks. Guess who was the idiot that bought ValueJet the week before one of the ValueJets crashed? There were people who were in Apple when Steve Jobs announced he had cancer. There were people who were in Tesla when Elon Musk did some goofy butt tweet that caused the stock to tumble. When he said, hey, he was selling all of his shares, people said, well, I better sell them too. Why take on the risk of an individual company when you can buy the haystack? Why look for that needle in the haystack when you can buy the haystack? It's too risky to take on individual stock risk. It's too time consuming for you to try to beat all of the fund managers out there trying to find the next Tesla or the next Apple. It's too time consuming and it's futile because you are not going to outperform the S&P 500 for 99% of it. Now, 1% of you may be the exception. I don't even want to try to be the exception. I don't have to be the exception. I can at least get market returns or above market returns without doing all of that research. So what I'm basically telling you, someone tell me this, what is the research when you're looking at the statement of cash flows, the income statement and the balance sheet? What is that called? Anybody know? It's called some kind of analysis.
Financial statement analysis?
It's called fundamental. Have y'all heard of that before? Fundamental analysis. So your fundamental analysis means I'm going to go to Yahoo Finance, or I'm going to go to the library, or I'm going to go whatever, and I'm going to look up all the garbage on XYZ company. And you're going to spend hours and hours and hours and hours and hours. And then you'll go, well, I can't buy XYZ. It doesn't add up. And then you're going to go to the next company. You're going to go to ZYX and you're going to look at it and you're going to spend hour and hour and hour and hour. Income statements, balance sheets, statement of financial flows. You're going to read the 10Ks, the 10Qs, the annual reports, and you're going to listen in on the comfort call. Stop it. Fundamental analysis is BS. BS. You don't need it. You don't need it. Beth, did you say something, Beth Hudson?
I said it is total BS.
It's total BS. Total BS. You don't need it, Beth.
Well, and it doesn't make a lot of sense to even just do it for one company, right? It
Yeah.
only really starts to make sense if you do it for like a sector or some peers at the same time. So
Yes.
it's not just one company you'd have to do, it's several at least.
And Zach, ain't nobody got time for that.
Right.
You and I got kids. We got jobs. We got spouses. We got love interests. Some of you may have spouses and love interests. You know, you got all this stuff. You got the ball games. You got the kids. You got a career. You ain't got time for all of this. Okay. And I'm trying to keep you from going in the hamster wheel. Because if you go in this hamster wheel, you will become like Warren Buffett. You just won't have his success. You're going to kill yourself, people. Oh, so fundamental analysis is horrible. Okay. That's going to lead you to the next hole, to the next foxhole. Does anybody know what that's called?
Technical analysis.
Christiana, you said that, didn't you?
I did.
You know, because Christiana is going to say, ha ha. So if fundamental analysis is not the key, then it must be technical. So here's what you do. You ready? Here's what you're going to do. I know you. You're going to get involved in technical analysis. So you're going to go, and if anybody wants a free chart here, sign you up for a little, I like their little charting thing. This is called TradingView, and you can get a free account. I got a paid account. It's got extra bells and whistles. So here's what you're going to do. You ready? You're going to go here, and then watch what you're going to do. You're going to go here, and you're going to get you all these technical indicators. So you're going to get you a linear regression channel. Well, not only that, but you're going to hear something like he's talking about stochastics. And then you're going to go, I'm going to put a stochastics on here. All right. So then you got a stochastics indicator that's going to tell you when to buy and sell. But that's not going to be good enough for you. So not only are you going to stochastics, you're going to go to a relative strength index. So then you're going to put in a relative strength index under your calendar. And now that's going to tell you how to be successful. But then that's not enough, because then you got to get a Williams fractal on here. So you start reading about the Williams alligator. So you're going to put a Williams alligator on your chart. Now you're going to outperform the SP 500, because you've got the Williams alligator, you've got the fractals, you've got the RSI, you've got the stochastics, you've got all the indicators known to man, you've got every moving average, you've got little arrows telling you when to sell that apparently didn't work out, because what did the market do after it told it to sell? It just went up. And so, well, that's not good enough. So you go and you're going to put another indicator on there, and you're going to scratch some of these. So you can go, well, what are some other indicators I could put on there? So you go relative strength index. We've done stochastics. We go, let's do some momentum strategies. So then you're going to find the Chan momentum oscillator. And the Chan momentum oscillator, if it's above this, you're going to buy it. If it's below that, you're going to sell it. And then you're going to go down a rabbit trap, a rabbit hole that you will never recover from. Ask me how I know, and it will drive you nuts, because you'll be looking for the one indicator that will tell you when to buy and when to sell. And I'm going to save you a lot of time, because I've spent a lot of years searching. It ain't out there. And Jack and Zach and Dr. Brent and Christiana and Than and Beth and Evan and Guy and Alyssa and all of you, guess what? You ain't got time for that. And it's horrible. It is horrible, y'all, because you're going to sit there and go, what's the one thing that's going to take? And none of these are going to tell you the ideal time to find. So if you're in one stock, even let's say you're doing the SPY, and you finally find something that lines up. Look, y'all, all of these are in the down area right there. Look, down, 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 down. I must sell there. You know, it's not going to happen. I'm just telling you to don't waste your time. I'm telling you that the majority of technical analysis is, Christiana, tell me what it is.
BS.
She knows it's BS.
Well, and even then in that chart, you only realize it's down in hindsight when it's happening. Yeah.
All of these technical indicators are backward looking in nature. And you and I can find 2 or 3 that'll line up on one stock or one ETF. But by the time you and I whoop it out on the next stock or ETF, it's not going to work. Relative strength index will tell me exactly what I need. No, it won't. Well, the slow stochastics won't, but the fast stochastics will. No, it won't. Well, this momentum strategy, or the Williams alligator, or the Williams fractal, or the Williams this, or this, or that, or this, or that. No, it won't. And what I'm trying to do is just tell you simple. Because guess how I could make a lot of money? I could come up with an indicator. I could call it the Sweet Bobby, Dr. Bobby indicator. And it's the best indicator known to man, so that I can get all these trading platforms to use my indicator, so that I can sell books, and that I can sell courses, and I can sell my indicator, and I can sell this, and I can sell that. Because remember, how do financial planners and professionals make money? By complicating things that otherwise are simple. If I want to make money from you, I will complicate those things that are otherwise and should remain simple. Can y'all hear my dog scratching to get in? Will somebody let my dog in? He's getting on my nerves. So technical analysis is, as Christiana said, BS. Okay, so I'm going to lead you to another rabbit hole. You ready? So that means that there's only one that would work. Does anybody know what the next one is? Quantitative analysis. Quantitative, I can't even spell it. Quantitative analysis. The quants. Now, these are the guys that make you think that they're the smartest person in the room. These are the person that sits at the table with you while you're at lunch trying to explain to you why they're so smart, and they talk in statistics and they talk in probabilities. And guess what? I'm going to give just a little bit of nod to these guys. I'll be like, I'm watching you. I'm watching you, Mr. Quant, Mr. Quantitative guy, Mr. Quant who's using statistics, who's using equations, who's using some type of equation and probability and statistics to make sense of the market. Now, how do I know that this sort of kind of can help you? Because I used to be a poker player. How many poker players we got out there? Any of y'all like to play poker? Oh, y'all. Back when Chris Moneymaker won the World Series of Poker, we all played poker. That was what, in the early 2000s, Chris Moneymaker, we was watching the World Series of Poker, and I started playing poker online. And then Beth found out that I was trading and gambling with real money in the poker rooms online. And Beth sit down and had a heart to heart with me. She said, you ain't gonna be gambling my money. Shook that head like that. And she said, you got to get out of this. And on vacations, I was reading books about poker and probability and statistics, and it made sense to me. And I was pretty darn good. I won my first live tournament out of 212 people in Carrollton, Georgia at the mansion. I was so happy. I won my first ever live poker game. But Beth said, you getting out of this. You are not a gambler. She said, why don't you do something with your financial background? Won't you do something, and that's when I started going to the markets with options and futures and things of that nature. And I'm glad I did. But I still brought over some of the quantitative analysis that I was using to have success in poker. So I'm going to give not a full nod to the quantitative analysis, but I'm going to give just a little bit of check mark. And I'm just going to say, for those of you who are quants, I'm watching you. So you and I are going to develop algorithms. You and I are going to develop strategies that will tell us when to buy and to accumulate more assets, and that will tell us when to sell and to take some off the top. And you and I will use quantitative analysis, algorithms, statistics to do so. And you ought to be excited. I'm talking about dang well excited that you can go in the market as an asset accumulator with a plan to acquire an empire, with a plan to acquire additional shares of an asset that over the long run will go up. And then when it does go up, to convert some of those shares to the safety of something called cash.
Is this the formula that he's referring to in the book that he was, looking for? It was elusive for so many years.
That was elusive for so many years. Absolutely. Now, is this the only way to do it? No. I think there's another book that I've given you that is probably a very simpler version, but I want you to think through this one first. So this one's kind of complicated, y'all. It's a little complicated. And the book is a little dated. It's a little 70-ish, kind of like me. I'm a little 70-ish. But I think if you'll go with it with an open mind and you'll read the first 4 chapters, I think you're going to be intrigued, at least. You're going to be intrigued that you and I could possibly develop something that will tell us when to buy and when to sell, and how to acquire our empire in the markets. I hope you're excited, because what I've done is I've saved you a lot of legwork. I've saved you from going down the fundamental analysis hole. Can you imagine? You and I would have spent probably a third of this class diving into balance sheets and income statements and statements of cash flow. Can you imagine how boring and useless that is? Can you imagine if I'd sit here and said, we're going to look at the relative strength index versus the slow stochastics, and we went into all kinds of technical stuff, and then we would form fit it to work for what we wanted to do, and then we would go and go, well, I tell you what, let's look at another one, and let's add another one, and next thing you know, you've got a chart that you're having to look at every day from 9:30 when the market opens to 4 o'clock when it closes. Is that your life? Let me tell you what my life is. My life is going to look for my little duck that's missing right now. After I get out of here, I'm gonna go in there and I'm gonna look for a duck. I don't know where he's at. I've been looking all over for him. I can't find my duck. I hope he's around somewhere. That's what I'm gonna do the rest of the day. I ain't looking at the markets. I've already traded for my day. I've already had my algorithm to tell me a signal to buy more shares today. I'm done. And that's what I want you to do, because ultimately, all of this that you and I undertake is nothing but freedom. You and I are not we're not slaves to a place and time. We're not slave to being in a particular space. We're not slave to our mind. You and I have freedom of all of those three. So why would we want to march the markets from 9:30 to 4 o'clock Eastern time every day? I've done that. I've done what they call a 0 DTE trade. Some of y'all have done that. And I'd be in the market for the morning when it started, and then I'd be out at the end of the day, and I couldn't even go pee, y'all. Beth said, you ain't even come down all day. I said, I know, I got to pee and I can't come down. She's like, why can't you come down? I go, because I'm looking at the market. That ain't healthy. Get out and do something. Enjoy your life. Okay. Anyone got any questions? So again, I don't put on more than on you than you can take. But what I'm saying is read the first 4 chapters. You've got one discussion question to answer this week. And that's it. Have fun. Don't worry about balance sheets, income statements. Don't worry about finding the best technical indicator on the charts. Don't worry about that. Don't worry so much about quantitative analysis. Now, you ready for what we're going to do next time? I'm so excited because this is going to blow y'all's mind. Let me give you a little thing what we're going to do next time. I'm going to show you how to get into an underlying. You could call it a stock or an ETF like SPY. I'm going to show you how to get into it without buying it. I'm going to show you how to get into it at a better price than buying it. So let's say that you want to get into something that's $500 today. I'll show you how to make money and get into it at a lower price, which is what we want to do, right? We want to find things on sale. We don't want to buy them if we don't think it's fairly priced. So we're going to show you how to get that at a discount. And I'm going to show you how to make money doing that. It's really simple, but a lot of people don't know that you can do this. Y'all, I'm telling you, we are going to unlock so many things that are going to blow your mind on conventional wisdom that you're going to go throughout your day and you go, I don't trust anything that I believe, that I see anymore. I don't trust what the politicians are saying. I don't trust what the news is saying. I don't trust what you're going to be distrustful of a lot of things in life after you get finished with this course. And guess what? That is a good thing. And I will see y'all next week.